No, I'm looking to break this area right here. Next area of support. And we literally just pushed through that area it was struggling with. And now you see what happens once you break an area like that, you get momentum. And then the profits start to go up again. What my expectations are, that's why you don't want to trade without a plan. A big misconception when it comes to indicators is people, they read whatever the rule is, like with RSI for instance, they tell you to
Okay.
look and see if it's oversold or overbought at 70 or 30. And
Right.
sometimes this will go over 70 and it doesn't mean that a sell reversal is coming. Sometimes it'll go into 30 and it doesn't mean a buy reversal is coming, but it doesn't mean that it can't be right. So the way
Right.
these indicators work is they all have different success rates with different pairs and different situations, but nobody really takes the time to experiment with them because not only does each one of these indicators have a scenario where it's going to work best, a time of day where it's going to work best, a pair is going to work best on. They all have settings that you can customize, which is another thing I noticed that people just don't take the time to experiment with because it's really too much work. It's
Yeah.
almost like it's very similar to being a music producer. When you think about a Kanye West or a Dr. Dre, the reason why they're so good is because they sit in the studio for days at a time, just playing with hundreds of millions of different sounds, seeing which ones work the best to make the best sound. And that's what you have to do with these indicators and settings is play around with them, see which ones work best in different systems and different scenarios until you put together a strategy that works for you instead of just assuming it doesn't work because it doesn't work all the time. Like RSI, for instance, I decided I don't like, so I don't use it. And
Right.
that's a backbone for a lot of traders out there, even the so-called price action traders. It's almost like it's you really see it over and over again everywhere, not just Forex, but anytime something new is coming, the masses are rejected at first before they accept it, and then it becomes popular. Like just like what happened with Soldier Boy when he came out with the Soldier Boy dance, everybody was like, "That nigga whack, that's whack. That's not hip hop," and now that's what everybody doing. It's like
Right.
new trend come in and people reject it and then they accept it and realize that the first person was right the whole time, but that original person don't never get their credit.
Yeah.
So that's how I feel about indicators right now. It's new to Forex, it's science. It's gonna take a while before somebody can actually prove that this is something that can be used for profit. And if you go out on the internet and you search do Forex indicators work, you can find some reviews of people that say they don't. You can find some reviews of people that say they do. But at the end of the day, this is all math. Like
Right.
these indicators are set up to respond to what the data is telling it. So just like when you use a formula in algebra class to
Right.
figure out the whatever the variable is, it's the same thing with these charts. You're just applying a formula, or a lot of people use try to apply algorithms and artificial intelligence and whatnot. But at the end of the day, it's just all interpretation of data. Whether you're doing it with your own eyes, whether you're doing it with indicators, whatever the case may be, every single one of these indicators are going to give you helpful information. And a lot of these indicators are based on support and resistance. So the
Yeah.
basic explanation of support and resistance without putting on any indicators. If I zoom all the way out, you can clearly see where I have this dotted line right now.
Right.
See how the price came down and bounced off of that area more than one time.
Right.
That's an area of support. Here's another one. Here's another one. Here's another one. And here's another one. And then if you go up to the top, support is on the bottom, resistance is at the top. So resistance causes the price to come back down, support causes it to come back up.
Right.
Once these areas establish themselves, like all the way back here, once you saw this happen,
Right.
these two peaks, you knew that the next time the price came close to this area, it was basically going to bounce off like a trampoline. So it did
Gotcha.
it once right here, shot up, and zoomed out on a 30-minute chart like this. That doesn't look like a lot of
Right.
room,
Right.
but from here to here, that's about 200 pips. So that
Yeah.
was a quick 200 pip escalation. And when that happens, that's an area of momentum. So momentum happens when the price gets close to support or resistance, because it's basically going to bounce off of it and go in the opposite direction, or it's going to break through it and keep going. But it rarely ever just gets there and then that's it. Like once it gets to one of those areas, something's going to happen. And because
Right.
the price can only go up or down, you got a 50% chance of making some money from it, which is
Mhm.
way better than any odds you got of anything else. Uh,
Right.
Lottery ticket, stock, whatever.
Correct.
Can't do anything but go up or down, and you can make money both ways. So once you understand that, you really don't need any indicators to see those areas, which is why a lot of traders will say that they trade with naked charts and they don't use lines and indicators because it just makes everything complicated. They overthink things. It takes them out of their comfort zone. And ideally, you want to be comfortable when you're trading. You're going to be outside of your comfort zone when you're learning how to trade and when you're trying new strategies. But these traders, they find something that works, they get comfortable with it, and then that's all they want to do.
Uh-huh.
And then they want to shun the rest of the trading world for all the other strategies when it's really probably a million different ways you can make money off of this. Like I said, it can't do anything but go up or down. So
Yeah.
with all the factors involved, it's a lot of things you can take into consideration to raise your success rate or your chances of being, you raise that 50% up into the 60, 70, 80 percentile, which is ideally what you want to do is try to be right 70 to 80% of the time. Nobody's right all the time. And when
Right.
you use the risk management and you control those occasions when you're incorrect, you're gonna be profitable.
Uh-huh.
The biggest mistake people make is they let their emotions get involved once they're wrong,
So
and they either don't want to cut off the trade and lose too much money and blow their whole account, or they get discouraged, lose confidence in their strategy, and now they're ready to quit.
right. Right.
But it's just repetitions, just like a free throw shooter. Like Steph Curry could miss 10 straight threes. He's will keep shooting, knowing he's the best shooter in the world. Most traders lose money on 10 straight trades, and that's the end of their Forex career.
Yeah.
Can't get discouraged like that. You got to keep shooting, just like a jump shot.
Yeah. Yes, but I had some victories, so that gave me a little bit of confidence. You know what I'm saying? Like my first uh few days of trading, I had like 4 victories and maybe 6 losses.
Okay.
You know what I mean? Then I had the second day I had some, but it still wound up me losing. I lost about $10, so I got like $40 in my account still
Oh,
after about a week.
yeah, that's not too bad at all.
So,
The only
yeah,
issue
I
with that for
understand
most people is it's too boring. They don't get
the
excited
fight.
at the point oh 0.01 and they want to jump to the point 0.1 and start there and then they lose all their money.
Yeah, that joint will really see you out the door.
Yeah,
Yeah, that joint will see you out the door.
Man,
I think that what I was doing years ago. I really didn't know about, like, watching your videos. I learned a lot of terms that I didn't know about back in 2003, 2004.
okay.
When it comes to what is that, the lot size?
Yeah,
I didn't know about a lot size. I just was trading. You know what I'm saying?
yeah. It's,
And
they don't make it easy to understand. Like even at this point, I can't explain to you exactly how the lot size works. I just know
mhm.
how to calculate it for my money with the pairs that I trade. But that
Yeah,
formula, when you read it, it doesn't even sound right. It's like, what? It sounds like calculus to me. So I don't even try. I haven't even tried to grasp it. I just tell people, look,
yeah,
what you need to do this, how you need to do it. If you need to understand it more than that, you gonna have to break it down for yourself.
right,
And
right.
tell you what it means in dollar signs.
But that was one of the most important keys to watching your video, not to risk management. You know what I'm saying? That's
Okay.
what that stuck with me right there.
Yeah,
I
I seen
appreciate your
so many
time, man.
people blow their account. I had to do that video.
Yeah, exactly. So yeah, I'm gonna keep studying on baby pips, and now I got something to study that was supporting and resistance and learning how to. So what does it matter which time frame I stretch it all the way out, or should I use day or the week to stretch out? Or
What kind of trader are you? Do you look to get in and out of a trade?
yeah,
Uh,
right now I'm just a scalper, trying to,
Okay.
because
Yes.
I'm trying to work from 8 to 12,
Mm.
trade from 8 in the morning to 12, and then the what else you said? The 8 to 12 at night.
Okay.
Yeah,
So this the best way to think about it, and it's not a spot on equation, but you can think about it this way. On each time frame, you're gonna have different areas of support and resistance.
yeah,
So on the M1, this is support, this is resistance. The distance between here and here is only about 20 pips.
right.
Go up to the M5 and you find those same two areas, it might
Gotcha.
be 35, 40 pips.
Uh-huh.
Go up to the M15. Every time you go up a time frame, that average pip amount for support resistance area is going to go up. So you're going to hit those areas more often on the M1. You could sit back and bounce trades off of support and resistance all day, maybe 5 to 10 pips per trade. If you're
Okay.
going on an M5, you might aim for 10 to 20 pips per trade. If you could do it on the M15, you might aim for 30 to 50 pips per trade and so on and so forth. Once you get up to the daily and you're looking at these major areas of support and resistance on the daily, you're
Right.
talking about plays that could take days to play out because each candle represents a full day.
Okay.
So it takes way longer to create these structures. So like you were talking about forecasting, if I'm trying to forecast what's going to happen next week or over the next few days, I'm going to come to the daily chart and try to find the last major area of support or resistance, which here you can see is up here. This resistance area that's been tagged 1, 2, 3, 4, 5, 6 times now.
Mm.
So right now, at this very moment, you can see that the price is already coming down from that resistance area.
Right.
It's already touched it and dropped today. And the shadow on the bottom means that it's already fell and come back up today. So perspective wise, just looking at this one candle, because it's hit a high and come down and hit a low and come up, the price could go either way today. Had it only gone one direction and not the other, I might make an assumption based on that.
Right.
Or if I could see that the daily candle was moving down right now, I might assume that it just hit the high last and it's on the way back down to either the median or the low. And that's the other thing with support and resistance is that, especially for as far as the day is concerned, the price will create a new high. If it creates a new high, it's got to come back down to the median between basically the average of the current candle and the last candle. Once it creates a new high, it's going to go back down to the median. So you can base a lot of strategies just based on what the median is as far as the price high and the low for that day, or maybe even that week. You could take the last four candles, get the high and the low. And if the current price is higher than the median, you would sell back down to it. If the current price is lower than the median, you would buy back up to it.
Okay.
And these indicators, a lot of these indicators will just automatically highlight those areas for you without you having to do all of this extra work. Like the Ikomoku cloud, for instance, which is it has the most tools as far as one indicator is concerned. But you can use this cloud as an area of support and resistance. Whenever the price breaks through that cloud, you know that it has upward momentum. Whenever it falls through the cloud, it's got downward momentum. This red line and this blue line are moving averages.
Uh-huh.
So a lot of the indicators will have moving averages on them. They just work in different ways. Like the Bollinger Bands, three moving averages, and the middle one is the median.
Yeah.
Um, the baseline and conversion line. The conversion line, I think, is the an average of the last seven candles, and the conversion line is an average of the last 26. So when you really think about that, this is it's got a Japanese name. I'm assuming this indicator has some Japanese origin. Not to be racist or anything, but there's been a stereotype that Asians have been better than math at us for centuries.
Mm-hmm.
So knowing that, why wouldn't I take heed to a mathematical tool they created? Like we all like Sudoku over here. It got all popular. That came from over there. They're just real good at math and real good at numbers. So
Right.
they created this tool for traders to be able to profit off of any pair, any time of day. When they made this, that's what they were keeping in mind. So they're
Mm.
saying that if the average of the last seven candles is higher or rises above the average of the last 26 candles, then you have upward momentum, similar to how you would use a 5 and a 20 EMA. You just wait for the 5 EMA to cross over or below the 20. You're saying that an average of the last five candles crosses the average of the last 20 candles, then you're in an upward trend. So sometimes even these price action traders that say they don't use indicators, and it's almost like they're trying to make themselves seem more prestigious or professional because they don't need indicate. Look at me, I can do this with no indicators, kind of thing. I've even seen them apply a couple EMAs and then they won't use anything else, but they'll watch the EMAs. All this is two EMAs with some additional support and resistance areas highlighted. Like, I don't understand. And then you can see through it. It's no candle that you can't see exactly where it is.
Right.
But I guess some people out there will put that on. I mean, even I'm one of, I can use 5 or 6 indicators at a time without feeling like I'm confused and don't know what's going on.
Yeah.
So alligator, parabolic, Ikomoku cloud. I can put all three of these on here and see exactly what's going on. I can see the price was trending up right here while the parabolic was below the price. There was
Uh-huh.
light consolidation period where these three dots are consolidation period, small downtrend, uptrends, parabolic always below, parabolic always above. The alligators are opening up upwards, which was upward momentum. They're still opening up upwards. Every time these three lines converge, you got a consolidation period. So this is what I call a launch pad area. And I'm looking at this right now, even for myself, because I was in the opinion that GJ was trending down before yesterday when we got this huge green candle out of nowhere. So now it looks like the price is trying to break this resistance area, which would create a new high for even the last month, as you can see, because all like 30, 40 candles right here. So the last 34 days, the price has been below this resistance area. So if price were to break this area, it's going to keep going.
Mm.
Right now, it's below that area. So if nothing else, if this structure here is correct with the parabolic being below the price, the alligator starting to open upwards, the cloud being below the price, these are all buy signals on the daily. I would expect the price to rise the next few days as well as throughout next week. And what I would be looking at would be for the price to test this area. So no matter what, at this point, I would buy. I would either set my target profit right under this area because I think it's gonna bounce back down. So I probably set my target profit around there, or I just enter a buy and watch it and wait to see what happens once I get to this area. Now, if I'm in a buy and the price gets back up to this area, and I see a sell signal appear, that's when I would cash out. And I really wouldn't even wait for it to hit the daily because back by then you could have cost yourself 100 pips because
Right.
of how high we are on the time frame. And if I draw a line, this is another reason I like trading view because anything you draw is permanent. So like you can keep a journal of what you thought was going to happen by
Trading
drawing.
view.
Yep, trading view.